Warren Buffett is an exceptional investor, and it is a privilege to have him with us in 2023. We will explore 9 valuable investing tips inspired by his wisdom. Let's start with a simple analogy. Interest rates affect asset prices like gravity affects an apple's fall. To understand 2023, we need to look back at 2022, where we saw that stocks don't always go up. Warren Buffett has been our guide, revealing the forces behind stock movements, with interest rates being a key factor. Warren Buffett compares interest rates to gravity's effect on an apple. Low rates are like weak gravity, while high rates are like strong gravity pulling down asset prices. Recently, the Federal Reserve, led by Jerome Powell, has been raising rates from near zero at the start of 2022 to 4.33% by year-end. This has contributed to falling stock prices as high rates act like gravity, pushing stocks down. Powell plans to continue raising rates in 2023, potentially leading to more stock declines. To tackle this, we can learn from Buffett's advice. Consider buying stocks during declines, which can be valuable in this market. Warren Buffett, a renowned value investor, has a unique approach compared to many others in the market. While some panic and sell up when stocks drop, true value investors welcome falling prices. This might seem counterintuitive, but it's because they view stocks as ownership in real businesses and aim to buy at lower prices. It's like hunting for bargains. As Warren Buffett advises, be fearful when others are greedy and greedy when others are fearful. In other words, the best time to buy is when others are scared. So, when stocks dip, value investors see it as an opportunity to celebrate, similar to buying discounted goods. As someone who started investing at age 11, I see declining stock prices as a chance to acquire assets at lower cost, potentially leading to future gains. When it comes to anything I invest in, particularly stocks, it is a fact that they will have their ups and downs. You could probably find the statistics on what percentage of the days since the day I was born, stocks have gone down, and it may be something like 30% or so. The truth is, we can predict with certainty what stocks will do in the short term. However, one thing we can reasonably predict is that American businesses over the long haul will perform well. Let's consider the 20th century as an example. The Dow Jones Industrial Average went from a modest 66 to an impressive 11,497. Moreover, during that period, you were receiving dividends 3 times as much as the entire average was valued at the beginning. This impressive growth occurred despite 2 world wars, the Great Depression, flu epidemics, and numerous other challenges. The bottom line is that American business has a strong track record of success over time. If you own a piece of it through stocks and avoid making impulsive decisions, you should do well. It is essential to remember that the only person who can lead to poor results in the stock market is oneself through hasty decisions or emotional reactions. So, maintaining a long-term perspective and not letting fear or greed guide your actions is key to achieving success in investing. To gain insights for savvy 2023 investing, let's review Warren Buffett's 2022 stock picks, focusing on his top 3. First, Chevron. At 5.72% of his portfolio, Buffett's biggest 2022 choice was Chevron, a major oil company known for its attractively priced stock with a low PE ratio and robust dividends. Second, Occidental Petroleum. Another substantial pick, making up 3.3% of his holdings, was Occidental Petroleum, mirroring Chevron's traits with a low PE ratio and consistent dividends. Third, Taiwan Semiconductors. Surprisingly, Buffett's third largest 2022 investment was Taiwan Semiconductors, specialized in semiconductors. This departure from his usual style might be influenced by his investment managers or the recognition of the enduring demand for technology products. In these somewhat challenging economic times, it is crucial to recognize that both good and bad businesses are affected. Warren Buffett often says, "Only when the tide goes out do you discover who's been swimming naked." While it's beneficial for society to see poorly performing businesses exit the stage, it can be detrimental for those who invested in these weak companies. Hence, in 2023, it is especially important to invest in high-quality businesses that produce essential products. Such businesses are likely to be caught unprepared during tough economic conditions like recessions. Buffett has consistently followed this approach throughout the years, investing in top-notch companies like Coca-Cola, Apple, Kraft Heinz, and Duracell, all known for their quality. Another valuable lesson is that of slow and steady wins the race. This is a principle that Cathie Wood seemed to overlook or perhaps never learned. Rule number 1 in investing is don't lose money, and rule 2 is don't forget rule number 1. While Cathie Wood had impressive success in 2020 and 2021, when the market and high-growth tech stocks were soaring, 2022 brought economic challenges, causing her portfolio focus on high-growth innovation to struggle. Over the past 5 years, Warren Buffett's conservative approach has resulted in a 56% gain, far surpassing Cathie Wood's 5.1% loss. The lesson here is to be cautious, avoid overpaying for stocks, and prioritize preserving capital. Lastly, there's the analogy of buying a horse. Before investing in a business, it is essential to ensure it doesn't have any hidden flaws, akin to a horse with a limp. Excessive debt in a business is like a horse that limps. It might perform well in bull markets but will falter in bear markets. Hence, before purchasing a stock, a thorough examination of its balance sheet is a must. Let's take Alphabet's stock as an example. If you go to Yahoo Finance and check the financials, specifically the balance sheet, you'll find that their total debt is a manageable $28.3 billion. Now, if you look at their cash holdings under current assets, they have a hefty $139 billion in cash on hand. This means that Alphabet is in a solid financial position, and you could say it's not a limping horse. However, if you look at another stock like AT&T, the situation is different. AT&T carries a hefty $150 billion in total debt and has only $2.4 billion in cash. This stock, on the other hand, could be as simple as a limping horse. Understanding the value of what you're buying is a key principle in investing. It is often said that a fool is someone who knows the price of everything but the value of nothing. This applies to the investing world as well. While many investors focus on stock prices and their daily fluctuations, those following Warren Buffett's approach prioritize understanding the true value of a stock. To do this, you calculate the intrinsic value by discounting future cash flows, a method famously associated with Buffett. This process isn't as complex as it may seem, and you can find detailed explanations in various resources including my channel. Investing differently from the crowd is another Buffett-inspired strategy. He has always gone against the grain. While most investors flock to Wall Street to buy and sell stocks frequently, Buffett has stuck to his hometown of Omaha and rarely makes rapid changes in his stock portfolio. Unlike many investors who sell stocks as soon as they see a decent profit, Buffett takes a long-term perspective. This distinct approach has been the key to his success. Warren Buffett's steadfast approach to holding into stocks contrasts with the typical investor's mindset. His track record of consistently outperforming the market highlights the value of this unique mentality. Independent thinking can be an asset in investing, as the average investor often struggles. When planning your 2023 investments, consider asset classes' historical performance. Over the past 2 centuries, stocks have excelled, doubling bond returns and surpassing gold by 6-fold. In contrast, holding cash is among the worst strategies due to inflation's erosion. Buffett's preference for stocks stems from their business ownership aspect, designed for long-term profitability. It's essential to note that this analysis omits real estate and cryptocurrencies, each with its complexities and risks. For young or middle-aged investors, stocks, representing businesses, offer a compelling choice. Older investors might explore less volatile asset classes, as stock can experience periods of stagnation. Warren Buffett's wealth underscores the effectiveness of investing stocks grounded in historical success.